What is it that's driving Adelaide's massive price growth? This episode, let's look at some of the on-the-ground facts before they even have a chance to turn into the data.
Adelaide's median house price soaring above $900,000.
Property investor and Adelaide real estate agent David Liston shares his on-the-ground insight of a massive factor of price growth in Adelaide.
The upward pressure is coming from one buyer demographic in particular.
And this is the interesting part. So if you're invested or investing in the Adelaide property market, this is an episode you're going to want to listen to closely. My name's Todd Sloan. This is the Pizza and Property Podcast. Let's jump into my chat now with David Liston. David Liston, how are you, mate?
Good, thanks, Todd.
Mate, it's always good to see you here. It's good to have a laugh, and it's also good to talk about some on-the-ground stuff that's really happening in the property market, because we get a bit of a delay with the data. But you and I jump on the phone, you're like, hey, Todd, here's literally what's happening.
Yep.
And we're going to talk a bit about that today, as far as some pressure you've been seeing, probably over what would you say, the past 2 months-ish?
Yeah, 4 to 6 months.
4 to 6 months now. Okay,
Yeah.
so 4 to 6 months. And can you sort of walk us through, before we really unpack what it is? You told me a bit of a story with listing recently that just illustrated this perfectly. Do you mind if we kind of jump into that story?
Yeah, sure, Todd. We're seeing some upward pressure in a particular price point in the market at the moment.
Mm-hmm.
For example, Goodwood Street. So typically this
This is a listing you've sold?
Yeah,
Yep.
yeah. So we just recently sold this one, so we can talk about
So
it.
all the pressure isn't happening in Goodwood Street?
No, it's not just refined to one street. It's over the whole state.
Okay.
Yeah.
What's happened?
So we're finding in the lower end of what we call the lower end these days, which is not really the lower end, but it's referred to.
Technically it is now. Yep.
It is now. There's been a real upward pressure from a particular buyer demographic.
Okay. And so what happened with this property? Where was it originally priced?
All right. So probably when I first started chatting with the vendor, we were looking at 500 to 550.
Okay.
3 bedroom, 2 bathroom, 580 square metre block. So a nice little set and forget.
Okay. And that was pretty reasonably priced. That wasn't sort of pricing it low or high. That's just that's where the market was.
That was where the data indicated, all recent sales suggested that that's where it should be situated in the market. And to be honest, I always like to put the top end, at the top end of the market, so we can get a great result from our vendors.
Yeah, swing for the fence.
That's
Right.
it.
Yep. All right. And then what started happening in the campaign?
Okay, so as we were getting prepared to go to market, so I've been noticing a bit of an upward trend in prices, and I called my vendor and I said, hey, look, my gut feel is we need to pivot on our campaign, and let's
like adjust the price?
adjust the price,
Okay.
like realign the price to where the market's at. I suggested we go 550 to 600, which
You're putting the price up.
yes, and normally as an agent you having the other conversation,
Yeah.
but I felt I needed, as I do with all my vendors, I wanted to protect them going to market, and I'd prefer to be at the pointy end, dealing with quality over quantity. So we had the conversation around price. He said, Dave, do you think? And look, it's a risk as an agent, because you don't want to start to put it too far at the point end, you're pricing yourself out.
Okay. And so as much as the Adelaide market is going up at the moment,
Yep.
what did it go up last month?
So last quarter was 3.3%.
Okay. So you're talking about adjusting it up over 10%. So it's not like it grew like within this month by that price amount or anything like that.
No. And like I said, this is being on the ground and seeing where this mentality was coming from.
Yep.
And just having a gut feel and pivoting with that. So funny should say, well, we actually are up 13.3% year on year, which is
That's
substantial,
wonderful.
coming off
Yeah.
the back of what we have already come off. So
Absolutely.
So we rolled the dice,
Yep.
and I was quietly confident with my suggestions to my client.
Mm-hmm.
And to my surprise, it still went higher than what we quoted.
Now, this is the interesting part,
Correct.
because if you're still with us up until now, it probably just sounds like we're telling a story of a house being sold. But why did it get pushed higher than that 600 mark?
So this is where the upward pressure is really happening from the market. So 600 is the new 500.
Mm-hmm.
Okay. The upward pressure is coming from one buyer demographic in particular, and that is your first home buyers.
And why 600?
There's a limit, there's a cap with some of these grants that are associated to first home buyers at the moment.
Okay.
650 is on a new build, where they get their incentives with lesser stamp duty, and
Yep.
obviously there's deposit incentives there as well. But on an established, it's 600 seems to be the number.
All right, and I wanted to kind of delve into this a little bit more and where it gets really interesting, because a lot of people don't really understand what happens behind the scenes. You just see one offer gets accepted, the house was sold.
Yep.
But could you open up a little bit more about how many offers you had on this property? How many came from more like the first home buyer demographic, where it tapped out, and really give a little bit more of an understanding of the back end of this?
We ran it for 3 opens. The first open I had 40 groups through, and we ended up with about 15 offers. So
it's already awesome.
It's already awesome, and then some agents would tap out of that. However, I believe, working for your client, you need to explore the market the best you can. So we had a midweek open for all the people that couldn't make it on the Saturday, and then we followed up with a final Saturday offer open.
So you're still only on the market for like 2 weeks?
Yeah.
Yep. Okay.
Yeah. So for the vendor, everything's moving really quickly,
Yep.
but behind the scenes, there's a lot of work to make sure that we're ticking all our boxes and covering as many bases as we can.
And how many offers did you end up with?
I ended up with in excess of 30 offers.
Okay, so more than 30 offers.
Yep.
Now, how many out of those offers, I don't expect you to remember the exact number, but roughly were more your first home buyer below 600,000?
Probably about 80%.
Okay, and this is where I find it interesting.
Yeah. So for this particular property, being on a 580 square metre block or whatever it was, it eliminates a lot of investors because they want the larger land holding. However, it was a nice set and forget, so it did create a little bit of investor interest, but it was your perfect first home. It was priced accordingly to that first home buyer market. However, obviously, with the limitations that some buyers have out there, and it seems to be majority of the buyers have the same limitation, and that's what we're seeing on the street. Obviously, if you don't have that limitation and you're pretty au fait with where the market's at, because buyers aren't silly either, and they can see that they've missed out on a few properties that have been in around this price point. So automatically they just start coming in above, which then majority of your market drops out, but you've still got a handful of buyers. When you're dealing with over 30 offers, you've got a handful of buyers and buyers that are willing to go further for the property.
Why do you think investors should care about this? Because it's a first home buyer thing. But I'm looking at this and kind of going, yeah, but now you got to know where first home buyer limits are around the country, and if they're being exceeded yet, or if they're starting to sort of be exceeded. But what's your take on this as to why it's really relevant for investors?
Todd, it's really relevant for investors because they need to know where the market's at. So in South Australia, predominantly, your 500, 550 is where a lot of investors were comfortable. The yields were still really great. Now that the market has theoretically been pushed to another price point, having an understanding as an investor, going, well, this is where majority of the market is now seeing value, is the new black. So you're going in, understanding where the limitations are of your competitors, and then just putting that little bit extra into secure. Now, obviously, it needs to make for a good investment. So you don't want to be overpaying. I hope you do when you buy off me, but you want to be careful that the yields and everything still line up.
So I think this is so important for everyone to really understand, because you need to know where your competition's coming from. And in this case, it's very firmly coming from, well, like you're saying, around 80% first home buyers. Like, it is absolute fuel that's being thrown on the fire. But then other investors are coming in just a little bit above. And so I think the next, or the last real takeaway that I get from this would be, you'd want to understand what your first home buyer limits were all around the country, because they are different in every state. What David's referring to now is in South Australia. So if you're looking at buying in the South Australian market, 600, 650 if you're looking at a new build, which, I mean, new builds is a bit of a different story. But around the 600 is really where everything's capping out. Obviously, it's going to be different in Victoria, New South Wales, Queensland, etc. But I think that this is just going to be valuable information for everyone to really overlay in the state that they're looking at purchasing in.
Yeah, great, Todd. As an investor, it's about using this to your advantage, knowing where your competition taps out, so then you can make an informed and educated decision to where you come in at, without playing too many games or setting yourself up for disappointment.
Yeah, because I'm just picturing right now that phone call with an agent, and they try and say, oh, well, I've got like 50 first-home buyers that are interested at 700,000. It's like, do you? Like,
well, firstly, Todd, we don't quote where other offers are at.
Well, maybe you don't, but yeah.
No.
But mate, look, thank you very much for coming on the show. I really think that this kind of on the ground insight as to what's happening, we're going to be doing more of this on the show, man, but because it's super valuable. Is there any other final words of wisdom or anything you'd like to leave everyone with today?
I suppose we just touched on it before, Todd. For anyone that's interstate, they're looking at investing in different capital cities. Just make sure you do your groundwork and your homework on where that your competition may be at. And for example, if you are looking in and around that first home buyer market, just understanding what sort of grants are out there and what price points they may be working to.
Perfect. David Liston from the Owens Castle. Thank you so much for joining us on the show, man.
You're welcome, Todd.